All right, everybody. Hey, welcome to the Note Nation Top 40 Tour as we roll into South Florida and spend a little time in the Miami market out there, guys and gals. Hopefully, you've had a great day. I want to thank you for taking time out of your schedule. I promise to have you out here in less than an hour as we discuss what's going on in South Florida and the different future and current opportunities that are going on in the market out there. So we've got a variety of local and national investors that are obviously interested in Miami. Miami is a very big international investor audience as well. We're going to be discussing all the different markets out there available. If you'd like to find out more markets in the other top 40 cities that we focus across the country, you can always go to notenationtop40.com. Check out the schedule and the replays. Make sure if you're watching this, leave a comment. Comment in the chat roll here. And if you're watching this live with Zoom or on Facebook, or if you're catching the replay on YouTube or any of our social media channels, feel free to type in a question or comment. We'd be glad to answer whatever your question might be for you. We'll be discussing the statistics and the numbers, what's going on in the market, how it's affecting a variety of things. We'll talk about future opportunities, and then we'll dive into where to look for those opportunities and how to get started for those things. So if you guys don't know who I am, my name is Scott Carson. I've been an active real estate investor since 2002. I have bought a lot of debt, a lot of property in Florida, specifically Miami Beach area over the last 20 years. As I said before, been an investor since 2002. CEO of WeCloseNotes.com. You can find out all the different things that we offer at WCN. I've purchased over $500 million in distressed debt from my own portfolio and worked with investors to close on over another $1 billion. I've been teaching investors on how to tap into distressed real estate since 2004. I am also the host of the popular nationally syndicated podcast called The Note Close Show that you can listen to anywhere that you download podcasts or listen to the radio. I invest all across the country. As I said before, Florida has been a very hot spot of something I've been investing in for about a dozen years now. But I do call Austin, Texas home. So our mission has always been at We Close Notes to help investors to accomplish their goals and dreams and increase their wealth through debt investing. And we believe that buying debt, not only do you get better deals at better pricing, but your months and exit strategy is way ahead of traditional real estate investors on the fix and flip or the wholesaling side. So why am I doing this on an evening? Why am I spent 40 evenings with you guys going through different markets out there? It's because I love to help investors out. I really do. I also love to solve problems and helping people get out of a bad situation. I guess you could say that would be my love language is solving issues. I do believe that what's going on right now and what we're going to see in the next 6, 12, 24 months is the opportunity that many people have been looking for. I don't care where you're at currently right now. If you're a brand new investor or been around for a while but looking for new deals, this is an amazing opportunity that's happening right now if you know where to look. I was once a distressed borrower, so I do empathize with the borrowers that out there, the people that are facing difficult times, being laid off, not being able to pay the mortgage, falling behind in a variety of fashions. I've been there once before, so I empathize with them. But I know that there's opportunities for us to create win-win scenarios out there. Win-win-win or win 4 to the 4th power if you want to out there. So there's nothing greater though when you can help somebody accomplish an obstacle or achieve a dream that they thought was once impossible. For many people, the idea of home ownership, buying a house, was a dream at one point. And a lot of people have gone out and done that in the last few years. But now it's kind of turned into a nightmare with them being laid off, businesses closing, the whole state's shutting down for the most part. Not anything fault of their own, but that's a lot of times what happens out there. So I've set a goal for what we do here at We Close Notes to really help 1,000 investors tap into the debt markets in the next 12 months. And hey, at the end, you can find out, if you're watching this, how you can tap into that as well. But anyway, let's talk about where are the opportunities. Well, the opportunities, as I say, are everywhere, ladies and gentlemen, if you know where to look. That's what it all comes down to. And I don't care what asset class you're investing in. There's a variety of different, deal flow out there that you can dive into in a variety of fashions, whether it's you're looking at self-storage facilities or apartments or single-family homes or mobile homes or affordable housing. Maybe you're looking for office space or office buildings or medical office or hotels, motels. There are opportunities everywhere. And with what's going on right now, the United States is on sale. We got a lot of people putting capital together to buy into the market right now, not waiting 12 to 24 months, but get things rocking and rolling right now. And now's an amazing opportunity to really do some great things if you got some big goals for yourself. And what's great, I don't care how old you are. I don't care if you're young or seasoned, I should say, with what color skin you have, white, black, yellow. It doesn't matter. I don't care if you've been a successful business owner or a failed business owner in the past. done great at real estate or sucked at real estate before, there's opportunities right now if you're willing to take action. The banks don't care what your FICO score. They don't care if you're currently behind on your mortgage. There are opportunities for everybody involved out there. And look, it's either those take action or those sit around and shoulda, coulda, woulda. But I should have taken action. I could have done it, but man, I would have been in a whole lot different place later on. We've all set big goals. 2020 has been a bit of a, for some people want to do a repeat. I actually believe I'm going to come out of 2020 actually stronger, and our business will be a lot better off because of some of the things that happened, because we've learned to pivot. We've learned to look at some of the things that are taking place as opportunities. And we've all got different goals. Some of us, gave up our goals the first of the year, got halfway through the year, like, hey, screw this, I'll just wait till next year. And I don't care what your goal is. Maybe it's to retire and spend time on the beach drinking pina coladas or margaritas and riding off in the sunset. Maybe it's to retire your spouse or spend more time with your husband or wife or whoever it might be. Maybe it's to spend, put your kids through college. Maybe it's to retire your mom and dad who have been doing a great job for and support you along. Maybe you're tired of the staycation and you want to go on someplace exotic vacation. I get that. You want to travel differently, do fun thing. Maybe you just want to upgrade your dig, your crib, or add more real estate to your bottom portfolio. That's great. Whatever your goal is, it should be a goal for you because that's you. But we all know it takes a couple things. First and foremost, it takes capital. And most people, that's the number one line where they give up and walk away. I don't have that money in my account. I can't do it. Well, here's the thing, ladies and gentlemen. With what's going on in the market right now, there's an immense amount of real estate available. There's also the perfect storm of trillions of dollars in private capital out there looking for a place to put itself, looking for somebody to come in and say, hey, do you have a deal that can give me better than 0.101% at the bank? And now's the opportunity for that. And we'll talk about how to tap into both those things here over the next 35 minutes. Now, let's dive into what the national numbers say. Kind of doom and gloom if you look at things for a little bit. 11.1% unemployment rate in June. July's numbers are not quite done yet, but pretty close to that. Over 50 million people have filed for unemployment. 52% of small businesses are expected to fail, if not come back. It's especially going to be hit hard with minority-based businesses. Probably closer to 60 to 70% of minority-based businesses are going to fail and not come back. They announced here in Austin, Texas, that most of the bars or the live music venues are not probably going to reopen because they just don't have the money set in place. So there's a lot of uneasiness going on. We know that's taking place in Miami as well. Before everything happened, the country was already on some shaky ground. 1 in 10 borrowers was already behind on their mortgage at least 30 days. That's not a good thing. You look at the national delinquency rate right now is 8.22%. That means 1 out of 12 borrowers is at least 90 days or greater behind on their mortgage. That number increased from 7.5% last month. So it's gone up a half point, and it's going to continue to climb with everything that's going on in the market. People are all excited, oh, the stock market's doing great. All home prices are great. That's not accurate. That's not always what people think of. And no offense to any realtors out there. Realtors, oh, real estate's great. Perfect. You're buying at the peak of the market. You're not paying attention to what's coming down the road in the next 90, 120, 180 days. I tell you, it may not be pretty for a lot of people out there. There are currently 4.2 million Americans currently in default. That's at 1 out of 12. And then you look at the history. If you go back to 2008, it took us 18 months to get to 1.6 million defaults in an 18-month period, okay, in 2008. We're already 2.5 times that number in 2/3 faster time in 6 months versus 18 months. It's going to get a whole lot worse. The banks are bracing for roughly about 15 million mortgage defaults, similar to what we saw 10 years ago. I think we're going to get close to that. FHA, Fannie Mae, agreed to extend forbearance agreements to the end of the year. That's no surprise. They've been talking about doing that for a while. But let's dive in what's going on in Florida a little bit. Now, Florida, it's gotten a little worse in Florida out there. When you look at the housing hardship index, it's something that bankrate.com puts together. What they do is take a look at the delinquencies, the unemployment, and some other factors and figure out where each state ranks as housing hardship. Now, Florida ranks, and you look at the unemployment at an average of 11.3%. All right, so it's right at about the same as the national level when it comes to unemployment rates. Okay, the default rates are at 8.7, higher than the national default rates by about 0.5 point. Now, those numbers put it as 9 nationally through July. Now, going back to looking at June, it was actually ranked 14th nationally. Means you want to have a higher number on this. You don't want to be in the top 10 of the hardest places to live. Now, obviously, a lot of that has been from the tourism. It's been from travel, service industries getting worse as things get shut down and tightened down a little bit. So things have gotten worse for Florida in the last 60 days. Now, looking at also, like I said, it's up from 14 in June. Now, looking at a couple things, if you look at the Florida rate, July's unemployment numbers are 11.3, okay? It actually went up. It peaked at 13.8 in April, 13.7 May, stood steady, dropped down a little bit to 10.3, but it's bounced back up by 10% in July. And I'm looking at comparing the Miami market to that. Miami's unemployment rate is still showing at 11.3%. They don't have the most recent numbers out. Now, I also want to take it one step further. So just Miami, I also pulled up Miami Beach, because a lot of people think of Miami Beach and Miami being the same thing, and they are different markets. So Miami, the Miami Beach area together is 14.2% unemployment rate, up 2.5 points, almost 2.4% compared to where it was last month. So that's why I say you've seen a lot of unemployment kind of dragging out and permanent layoffs taking place. Now, if you look at around Miami, you see the Miami area 11.3, United States 11.2, Broward County 11.8, Miami-Dade County 11.5, Palm Beach County 10.4%. You see it's kind of where it is through June's numbers for as far as the surrounding area. Now let's look at, if you compare, how is Miami doing compared to the rest of the other bigger cities? I thought I would bring this up here for you guys. So it's not the easiest chart to see, but you see this is from 11.3% in Miami, and you can see Lakeland, Winter Haven 14.1. Orlando is taking the cake at 16.5% unemployment rate across the board there in Orlando. Kissimmee, Stanford, obviously with Disney, Universal Studios, other places over the neck of the woods. SeaWorld's been hit hard completely. But it's also, you can say everything else is usually below 10% for the most part. Hermosa Springs at 10.2. Lakeland, obviously 14.1. That falls in with some of the others out there for you. So let's look at some of the real estate stuff when it comes to what's going on here. Now, in Miami, when you look at Miami and then Miami Beach here, this is basically the price point where you see foreclosures kicking in. Now, in Miami Beach, you see the highest level is in the over $1 million range in foreclosures. That's not a surprise. With a lot of high-end condos there. And then the 200 and 300 range. 200 to 300 range is the second highest. And then you got the 100 to 200. So really the 100 to 300 range, first-time home buyers, you don't really see that much below 100K, obviously, because there's not any property in Miami Beach below 100K. See a little bit in the Miami market up here on the top end side, where it's basically that 200 to 400 range is where in Miami is being the hardest hit out there. Now, comparing the foreclosures when it comes down on a county basis there, Miami, Florida roughly has 1 in every 9,700 homes in default. The top 5 zip codes, 33128, 33162. Those are 1 in every 33 to 3,700, and then it goes basically up to 1 in every 5,000 or greater at 33131. If you look at Miami Beach, the top 2 zips, 33139 is basically 1 in every 16,000, and that's predominantly from the South Beach big end, high end condos out there is what really is driving that. But otherwise, it's usually 1 in every 17,000 properties are seeing foreclosure. Now, what's happened in Florida compared to a lot of the other states out there? Now, Florida is really nice. They do have some current statewide moratoriums. DeSantis delayed things a little bit, but it ends relatively soon. Miami-Dade's already started to process evictions again for those that aren't COVID related. And you've seen that, but it's going to get a whole lot worse out here when the full moratorium ends August 31st, or September 1st, okay? Now, obviously, President Trump went in and put an executive order. You've got Fannie, Freddie, things like those delaying things through August 31st. They've also extended the forbearance agreements. We talked about that for a few months. If you've got a government-backed loan, that's a great thing, or you're renting from somebody who has a government-backed loan. But it's still going to you're going to see an increase, obviously, in the foreclosures and the evictions taking place throughout Southwest Florida. No surprise to that, right? Florida really hasn't, is slowly gradual through the middle of July, though. Hadn't really gotten back started on stuff as far as foreclosures. It's been more on some of the eviction sides, people that were delinquent beforehand, people who have trashed the property. There's things that you can do to evict people though if they're not performing. If you're moving in a family member, there's some other things that DeSantis have put in his bill there for you, but it's coming to an end now. Was that going to lead to us a huge tsunami of foreclosures as more mortgagers sink underwater, get behind? Yes and no, a little bit. There's a variety of different loan types out there that are really being heavily affected. Now, if you look at the numbers on the loan types, the FHA loans out there, first-time home buyers, really, those are the ones that are seeing the most amount of difficulties. Now, the number FHA is roughly double that of VA, over double that of VAs and other conventional loans, and then triple that of your conventional loans. But the numbers have gotten worse for FHA loans. Why? I'll get to that number in a second. A lot of people have been buying into first-time home buyers where the banks have been giving them a 3.5% down payment and also paying up to 10 grand in closing costs, like Bank of America. It's one of the programs that they offered up the last 12, 24 months. A lot of people, a lot of banks donating that down payment and closing costs. Why? Because they expect to make it up on interest. Well, you know what's happened? That's led to people getting their houses with nothing out of pocket, no skin in the game, no reserves, no real incentive there. And you're seeing that FHA default rate skyrocket. Whoop, actually, sorry, where was it? Oh, actually, it's at 16%. Maybe I forgot to tweak it off here, but it's over 16% default rates now. It's gone over 60, it increased by 60% just on the FHA loans. So that number skyrocketed quite a bit for you. Now, obviously, a lot of modifications. People are doing forbearance agreements, trying to stay in their houses, and that's a good thing. There's still roughly about 4.6, 4.7 million homeowners out there in forbearance. They expect there's still probably another 4.1, 4.2 million homeowners that need to be in that have not called the bank to do anything yet. So is this good news or bad news if you're an investor? Well, Florida does have a little higher default rate versus the national average, so you're going to see some deals there. But the longer foreclosure timeframes, especially your traditional foreclosure timeframes for Florida, and then also the foreclosure timeframes for the FHA loans, that's not a short period, okay? To foreclose on an FHA loan from start to finish is going to take you about 810 days. Yeah, it's going to take you roughly about 2 years to go through an FHA foreclosure. When you add in a backlog of forbearance agreements and this huge amount, it's not exactly 2008, 9, and 10 all over again, but it's going to get pretty bad. All right, it's going to get pretty bad. It's going to be at least 12, if not 18 months if you're a real estate investor targeting foreclosures before you see any. I had somebody the other day, return to short sales. Well, guess what, everybody? Yeah, you're going to have short sales, but that's going to be a while for that too before it kicks in for that. It's going to take a while. Now let's talk about the commercial market because that's being hit hard in Miami as well. You've seen, out of business, for lease signs, businesses boarding up. We talked about businesses failing. For a long time, commercial real estate's been on this huge boom, except for the last 2 years. I've been saying it's been overpriced, and a lot of the Wall Street guys, the big billionaires, have been seeing the same thing too. But that hasn't stopped the banks from financing a lot of this stuff, okay? Now, if you look at the default rates, this is through June, one of the most recent quarter aspect of it, but through June, you obviously lodging has been affected. Over 27% of all hotel, motel loans are struggling out there. You have retail has been struggling for a while. Obviously, people aren't shopping. You have restaurants that are struggling out there. You look at what has happened in the CMBS space, the commercial mortgage-backed security market out there in the top 15 metroplexes has been hit hard. And Miami is one of those top 15 with over 800 million in distressed commercial mortgage-backed security loans expected to default. Now, obviously, here's the kicker on that. Here's the thing to keep in mind. Most of that, we'll cover that in just a second, is over a couple assets, but it's still a very bad time frame. So when you look at the default numbers, like we said, 1 in 4 hotels, they think that number is going to increase to 1 in 3. Retail, 1 in 5 can probably increase to 1 in 4. You're going to see at least a 15% vacancy on retail or restaurant space on a national average. Higher places in some of your tourist markets like Miami. You're going to see an office vacancy set to increase to 20% nationwide. We know that's going to be hit hard with all the office spaces in the Miami market as well. Too, people working from home, they're not going to go to the office. Okay. Rents are expected to fall on commercial properties at least 10% by year end, if not more, and then also continue to decline into next year. Now, the biggest distressed asset is the Fontainebleau Hotel. Yeah. Okay. Huge amount of debt at the Fontainebleau is struggling right now. You're also going to see South Florida Mall could be seized in foreclosure. $65 million lawsuit for not paying its mortgage. Okay. Now, the thing about the Fontainebleau, I want to bring back to this, the owner actually refinanced this hotel and 4 others back in November and has basically been in default since then. Got refinanced out and has been in default ever since then. So it's literally, you're talking about 8 to 9 months in default. Oh, in serious default out there. The South Florida Mall is expected to go be in foreclosure if it has not done that already. You look at also too, 5 big South Florida apartment loans are in default as disruption hits the rental market. That's a big thing too. A lot of people are like, oh, multifamily is doing well. No, apartment loans have been getting hit hard as well. Housing, college, student housing, which kind of falls in that, has also been hit hard out there. So, what's happening out here? Is it all the big guys, or are you talking about banks, Scott? Well, it's been kind of a mixture. Previously, the big guys on Wall Street, the CMBS guys, financed most of that big stuff, especially that we saw that basically they financed about 64% of what happened last time. This time around, the banks have roughly financed 53%. They've gotten in on that. Oh, hey, let's finance some real estate, especially commercial stuff. It's safe. Yeah, let's finance at the top of the market over the last 2 years. And that's why they're holding over half of the bag, half the lion's share on this distressed debt. Now, they finance this stuff not at 75, 85, 90%. They're financing this stuff roughly at 60 to 69% of as is value back then. So, the borrowers bring some equity to the table. Yeah. But when you have decreased rents, increased vacancy, and then foreclosures popping up, that drives the value of the surrounding real estate down, whether you are performing or non-performing. And so you're going to see a huge amount, you're already seeing a huge amount of defaults, but you're also seeing the loan to values of these banks that were at 63 and 69%. Now they're at 70, over the 70% range, maybe 80% depending on what's going on. Banks don't want to be in that place. Yes, they're giving borrowers some time to get back on track, to work with the tenants, but they can't keep kicking the can down the road, and there's no government bailout for the commercial loans the banks have. So at some point, they're going to start foreclosing or going to the borrower and say, listen, you need to bring 5, 10, 20% cash to the table for us to keep this loan in place, take this back below 70%. And that's not going to happen. So what are the opportunities out there? As everybody tells me, and I've known this for years, the big opportunity is put some cash together, come in, buy this debt from the banks, and then we either work out with the borrowers or pivot the property in a variety of different fashions if you take over ownership. And we'll get about pivoting later on. Now, they say that banks are expected to be on the hook for roughly $48 billion in commercial real estate loans. I think that number is a lot bigger based on what they just recently released. When you look at a few weeks ago, Bank of America came out and set aside billions of dollars for their soured loans, and other banks have started to put away reserves. Bank of America set aside $5.1 billion. It's going to get bad. And the reason why I say it's going to be bigger than $48 billion is for this. The top 4 banks just recently, with their quarterly reports, mid-year reports, came out and said that they've reported at least $151 billion in loans with payments in deferral. What's that mean? That means they've deferred the payments for a while. $151 billion, okay? Oh, that's really, the total is $32 billion in the loan losses in the second quarter alone. That's why I'm saying it doesn't make sense with just those 4. It's going to be a whole lot worse with the losses because that's close to a record, and that's not a record you kind of want to have. All right. Now, looking at some of the big, Wells Fargo has basically $35 billion of first and second mortgages, which represents 12 and 10% of the real estate portfolio. 9% of Chase's, JP Morgan Chase's residential real estate is subject to payment deferrals. Wells Fargo, that modified $38.2 billion of commercial loans. Citigroup is deferring payments on $7.7 billion and $28.5 billion in consumer and small business. That's why I say it's going to get a whole lot worse. That's why I also say the United States is on sale, including South Florida. So where are the opportunities, ladies and gentlemen? Well, they exist in a variety of fashions if you know where it goes. Is it in the foreclosures and the REO market? No, because it's going to take a while to hit that. It doesn't make sense to go and drive by the real estate because at that point, the bank's going to be looking to sell it as close to value as possible. Like it has been, foreclosures have been expensive. It's not the same thing. Is it in the fix and flip space? No, it's not in the fix and flip space because you're not going to find a lot of assets that fall into that category, especially hard money lenders, mezzanine lenders have tightened back on their lending opportunities or lending platforms for fix and flippers. Is it in the rental space? Not with the number of evictions you're going to see. It's going to be hard keeping people in, and it's going to be hard finding good renters too. And if you do, you're going to be in the rental space that you probably be evicting people as well. So the real opportunity lies in the debt game we talked about, buying that debt, becoming the bank, and then trying to work it out with the borrowers in some sort of fashion. They're expecting to see a bigger wave of residential notes, not property, notes hitting the market in the fourth quarter, as the banks have now had 6 months to figure out things. They're going to know who's on their naughty or nice list and look to sell off the naughties and keep the nice. All right. On the commercial side, we're already starting to see deals this quarter here in Q3. A lot of my buddies out there saying they're seeing more deals in the last 2 months than they've seen in the last 2 to 3 years. Tells you what's going on in the market right now. Okay. Now, the biggest opportunity for us as real estate investors is not going out and chasing the property, but coming and reaching out to the banks that have their arteries chock full of that sub $5 million balance, that sub $2.5 million value, that property, buying it and being flexible with the tenants and the borrowers if you can in a variety of fashions, or allowing them to walk and taking the property over and doing something with it. Like our buddy up here in Arlington, Illinois, he had a hotel, boom, brand new hotel. Nobody's going to be traveling to Arlington, Illinois. So he converted it to 2-bedroom apartments and made a killing off it. Smart thing. Just like our buddy Garrison Gilbert's doing this with some smaller hotels in the Gettysburg and Baltimore area. We all know South Beach is littered with hotels. That may be the thing to do. Buying that stuff cheap and converting it to converting it to apartments for a while and then going from there. It may also be, you look at the office space, you got to get creative in your pivot. Just like this guy did in Denver. He took his 110 unit office space and converted it to self-storage and making a killing off that, because some of these people still have to look to move to store their stuff. It also helps when there's an apartment next door, but done a great job with that. Now, some of the banks that are in trouble out there. Are there banks in trouble? Heck yeah, we know there's banks in trouble out there. Okay, when you get default rates of 8.22% across the country, yeah, banks are struggling. And you look at, one of the things that we do is we look at quarterly reports the banks file with the FDIC, and there's a service called Bauer Financial that pulls the numbers, and they do it on a quarterly basis. So the most recent end of Q2 was June. Now, we like to track banks that have 5 branches or more, just because those that have less than 5 branches are pretty too conservative. They can't usually take a discount on their paper. They're willing to work that out. But the 5 branches or more usually is that number that allows for some really great discounts. Now, if you look at things, thousands of banks lend in Florida. But if you look on that snapshot of 1,500 banks and identify the banks that call Florida home as a snapshot, yes, there's a lot more debt than just these 38 banks originating in Florida. But out of those 38 banks based in Florida, 4.2 billion of it is in 90-day. Oh, I'm sorry. They have a combined $4.2 billion in 90+ day defaults on residential commercial notes. Now, that was June, right? If you look at the 30 to 89 day, that's an additional $1.2 billion in potentially distressed debt. Some of that's already distressed. So you're talking 5.4 to 6, somewhere around 6 million in serious delinquencies as long as this goes on. It averages out. Those 38 banks have an average combined almost an 8% of their entire portfolio in default. Ouch. Now, a couple of the biggest contributors, TIAA-FSB has 94% of their portfolio is 90 days late. Yeah, that's not nice. And then you also have Florida Capital Bank, which is 18% of the portfolio in default. Now, I actually spoke with the asset manager, the person in charge at Florida Capital Bank. We had a great conversation yesterday as I was calling banks. And he says, hey, they're not really selling a lot of stuff right now, but he knows they're going to have to do something here in the next 90 days. He's got a couple assets they're trying to work through, but he knows the piper has got to get paid here in the fourth quarter. And so he's like, yeah, we've got some, but we're going to be okay a little bit. We've got a lot of that sub $5 million commercial stuff and a lot of SBA loans that they're going to be looking to sell off of real estate as well too here. So yeah, we've had a couple good conversations with some Florida-based bankers yesterday. Now, why would you want to buy that distressed debt? Why would I want to buy or invest in a note where somebody's not paying, Scott? Well, first and foremost, you can start buying those deals and controlling those assets now versus waiting around 12 to 24 months to fight 95% of the rest of the real estate investors trying to buy deals. The next biggest thing is that you can buy this debt at huge discounts that you're not going to see buying the REO. And depending on location, foreclosure time frame, values, condition, a lot of opportunity out there depending on where it's at for a bigger discount. And by discounts, we're talking like 30 to 70% off the debt and controlling the asset. A lot of hotel debt going really cheap. right now, okay? Now, the strategies should include a variety of things, either getting the loan reinstatements, modifications, short sales, a lot of ways to make money and work out with the borrowers. It's also some great ways to work out in the commercial space too. Taking over the note, turning it into for cash flow with performing notes, performing debt, reperforming because you've given the borrower some opportunities since you bought the debt so cheap, you got some ways to work with them. Or, hey, just deed the property over and we'll let you walk away, and then you take the asset back and do what you want to do with it. Okay. Now, some other advantages of note investing out here. I know many real estate investors that get started are struggling right now. They don't have all that extra money to drop postcards and yellow letters out there. I get it. I've been there. We don't do that in the note space. We're not sending out mail or postcards to get one deal. No. When we reach out to banks, we're doing it via email, via LinkedIn, on the phone. I spent 5 hours yesterday alone contacting banks, and it was never, basically just 5 hours of my time with emails and LinkedIn connections and following up with people. Not that difficult to do, and not an expensive budget, and easier than most of you would think it would be. One source is going to lead to regular deal flow. I don't have to worry about, oh, rinse and repeat, drop 1,000 postcards this month or 5,000 postcards every month trying to find deals. One asset manager bank feed me. One phone call actually led to 3 asset managers, 2 on the commercial side, 1 on the residential side, with a major, huge bank out of California on assets across the country. All right, one phone call. Okay, now you can cherry pick the deals for your portfolio that you like. You can tickle the ones that you don't. If you can buy in bulk, you can get even better pricing in a variety of fashions out there. Now, you can do this with residential and commercial assets. You're not going to go buy a one-off note from the big 4. There's plenty of other lenders out there, institutions that have non-performing debt on their books that they're looking to get rid of. Okay. And if you don't have the money yourself, guess what? Tons of investors, thousands and thousands and thousands of investors out there have money sitting on the sidelines waiting to fund deals. Okay. And ladies and gentlemen, if you don't think this is get bad, there was 15 million homeowners underwater a decade ago. They expect that. How big a piece of the pie would you, if you could go back in time 10 years, what would you do differently? I know for me, I'd buy a lot more assets. For most people, it'd be buy a lot more assets. Well, you know what? We've got history repeating itself. You have that opportunity to go back in time and do what you would have done back then now. All right. Now, like I said, are there investors out there? Heck yeah, there is. There's over $9 trillion in private capital sitting out there on the sidelines and retirement accounts, 401ks not making anything. And Miami area is a hotbed. Okay. There are literally 53,000 investors with an IRA in the area there. And out of that number, 37,000 of them have at least 150 grand or more in their accounts. How many people do you need to talk to raise $1 million? Not many. Couple. But that's not, and maybe you're, oh my God, I'm scared to raise capital. Okay, guess what? Go out and connect with the other investors in Miami, because there's literally 43,000 people that call themselves real estate investors in the Miami-Dade area. How do we know this? Because we can track this. There's ways to pull lists and stuff like that. But so make yourself a deal engineer. Go find the deal from the banks and then go find the investors to fund the deals. Or go find the investors to take the deal off your hand and make a wholesale fee if you want to. I think you should stay involved. But what I'm trying to say is there's no end to opportunity out there with the deals and the investors or the money that's sitting out there. You just have to put the time together and be coachable in learning how to do that. Okay. Now, do you want to be the banker or the borrower? Everybody out there is in the note game, but you're usually on the borrower side. You're paying money out, your mortgage, your car payment, your student loans, whatever it might be, your medical bills. The bank, though, guys and gals, is where you want to be. There's a ton of savings out there. People have actually been saving more than they have in decades because of what's going on with the economy. All right? Trust me. You want to be the bank? Because the bank is giving people 1/10 of 1% of their money and going out and making 6, 12, 18, 20% on other people's money, making 20,000% returns because they understand it. And the bank, being the first lien positions out there, the bank always wins, ladies and gentlemen. You have the opportunity to become the bank these days and really make life-changing income, life-changing profits with what's going on in the market. All right, a lot of opportunity out there. So how do you tap in the tsunami of opportunities? Like I said, I've been teaching real estate investors about notes since 2010. So when I had my first class, done a great job with it, bought a ton of debt and helped people buy a lot of debt as well after their first non-performing debt. Thousands of people have learned how to buy debt from what we've not taught over the last 10 years. We're proud of that. Whether it's residential or commercial notes, we've got success stories, a lot of success stories, and ways to tap into both of those asset classes. Whether you're looking for cash flow or you're looking to add some assets to your bottom line for growth basis on that. You buy one-off or in bulk, easy to do either way, just got to know where to go. And then you can do trades. We've done trades as little as 25 grand all the way up to 5 million. All right. Anywhere from a one-off asset to hundreds of asset in a trade. And most of it has been with using other people's money out there. We're not using our credit. The bank does not care what your credit score is to buy or sell you a note. They don't care where the money's coming from. They're not going to season it. It's not the same thing as like going out and buying a piece of property, getting a loan. If you have the wherewithal and they can put the team together, which is easy enough to do, there are vendors everywhere. You know what to say and what not to say. You can tap into the note market. As I said, you've got to be coachable because there's things you want to do and things you don't want to do as a note investor. And like I said, it doesn't take $5,000, $10,000 a month in marketing to do this. If you can send emails, if you can jump on LinkedIn and connect with people, or you can pick up the phone and call them, whether you've got 5 hours a week or 50 hours a week, you can do this very simply out there. So whatever your focus is, single family homes, apartments, hotels, retail office, self-storage facilities, mobile home parks. Look, I don't care. There's deals in all types of asset classes out there, everybody, okay? You have to realize that you can make truly win-win scenarios and stories, not only for yourself, but for the borrowers on the other side of the debt, the borrowers that are facing difficulties, whether it's single-family homes, people live in their houses for years, want to stay. Maybe you want to go on the high-end side. Great, there's plenty of opportunity. We saw that in the Miami Beach market, if Miami is a big market for you. A lot of opportunity there. Commercial. Maybe you want to get in the multifamily side. There's a lot of opportunity buying smaller commercial apartment complexes because they're much more heavily impacted versus the larger ones. But guys, whatever your focus is, we talked about this is, whatever your goal is, you can do it big or small. I always tell people, hey, start off small, get rocking and rolling, and you'll be a lot happier. Just kind of like Gene here. Gene is one of our students. When we first met him, he was doing a little fix and flips here, doing what he could with what money he has. He didn't want to raise any capital, but snake bit before. We spent some time with him, taught him how to buy debt the right way, taught him how to raise capital, and fast forward a few years, he's done an amazing job now. Shot me a text message just the other day, talking about that. He's closed on his 135th asset. He started a fund, actually, $5 million fund. He's raised about $3.4 million in the market. And like I said, closed on his 135th asset and given retirement a whole different name. He says, that's pretty good for somebody who can't spell or text right. And so we're really proud of Gene, what we taught him. Love his success stories. Like I said, give retirement a whole different area code and price point for what you can do when you're closing on a lot of assets like that. Just like it has done for Laura Blanc as well. Laura from Wimberley, Texas here just moved into her dream house in Maryland, where she's originally from. Was doing like many real estate investors, going out there trying to do some wholesale deals, trying to get people to take over subject to or options, some light rehabs. And Austin is a pretty competitive market, just like Miami is. It's actually surprised Miami and Austin have about the same average purchase price. Now, Miami Beach higher, obviously, but many people are struggling to find deals. Texas, Austin is a very competitive market. She learned a note business from us. In her first 15 months, 16 months, she bought 14 or 15 deals. Fast forward 4 years later, she closed on over 100 assets, and she's getting ready to close on a portfolio of 135, 150 notes, performing notes at 50 cents roughly on the dollar, using other people's money. It's a $4 million trade, using other people's money to take it down. So we're proud. She started off small and has gone really big and been coachable. Keith Collins has done an amazing job. He's a guy out of Ohio, done a lot of real estate investing over the years, built some water treatment plants, worked in city government. I think he was a mayor of a small town. He learned a note business from us a couple years ago and really took to it like a duck on water. All right, really done well. Sent me an email about a month ago saying, hey, they ended up making 7 figures last year from their note business and could not have done it without what we taught them and how we coached them up. And so we're really proud of him and his wife, just absolutely doing amazing things. I love telling success stories. I could go on and on and on and on and on again with testimonials and stories from students from all across the country, all experiences, all age levels out there. You like I said, you don't have to have a lot of experience, just as long as you're coachable, kind of like Raphael here is. He's out of San Diego, never owned a property, all right, never owned a rental property. He's renting his own place. He was a business owner. He opened a car detail business, had 15 full-time employees that would go out and detail cars all across San Diego. Hard worker, smart kid. He's like 27, 28. But anyway, he started learning the note business back in November, took our class, applied it, and in December or January, he bought 2 assets in the first 30 days. Then he bought 3 more assets. He's raised a couple $100,000 from local friends and family, seeing his success. He's absolutely doing an amazing job. Now, he may not reopen his car detailing business, he said, because he may not need to reopen it. I'd love to help my staff out, but it may not be something that I want to explore because I love the note. I love the real estate business, and he's doing a great job. And he's got a big future ahead of him as a real estate investor. Like so many others that we have taught over the last couple of years, we have helped thousands of investors from all across the country do some amazing and big things, not only for their markets, but for markets all across the country and for their families by learning the note business. And how do you get your feet wet? How do you learn the note business? I tell you, stick your toes in the water. Let's see if the water's warm, see if it's a fit for you. And the way to do that, ladies and gentlemen, is by signing up for our one-day class called Note Weekend. It's a kind of an intro class, basics of note investing, but it's an all-day intense training for you to learn a lot. We had just recently in a class, over 75 people were part of it. Like, oh my God, so much great information. They all walked out of it like, oh my God, I understand the note business and understand the opportunities and get rocking and rolling. So we have a variety of them. We usually do this on a monthly basis, usually the 3rd or 4th week, Saturday of the month usually. It's an online training class. You're not going to learn everything about the note business in one day. We call it a mini workshop, and our students call it the Cliff Notes of note investing. We had students that have taken other people's training like, oh my God, I learned more in one day with you than I learned from 3 days, 4 days, 5 days with other people out there. So we take pride in the fact that we under promise and over deliver on a big way when it comes to teaching. Like I said, we live stream it on Saturday. If you miss it and can't make it all sessions, don't worry about it. You get the replays available to you on Sunday. That's right. At the Sundays available, the replays available to everybody on Sunday at 10 a.m. my time, well ahead of where they could, so they could spend time watching it on Sunday and really tapping into learning it and asking questions and going from there. Like I said, it's live on Saturday, so you can ask questions, we interact, ask questions of me, comment on things, and then we do an hour roughly of networking afterwards where you can learn and meet other people and other investors taking the class as well. Normally we charge $97 for this. That's what a one-day class usually goes for you. And like we said, we've got classes pretty much every month through the end of the year. So if you can't make one, we can always bump you to the next one. But we'd rather have you get learning so that way the 4th quarter is a lot better quarter for you because you're tapping into the deals that are coming out. The busiest time we're going to see is the 4th quarter and the 1st quarter with everything that's going on right now, ladies and gentlemen. And you want to start honing skills. You want to start tapping into assets and doing some big things out there. So what will we cover at Note Weekend, everybody? We'll cover a variety of things. First part of the day is all about how and where to find the note deals. Where do we find the deals? How do we get the asset managers on the phone or on LinkedIn? How do we discover those people? Really great thing. People walked out of Note Weekend with understanding how to tap into over 3,000 asset managers, okay? We'll talk about the second part of the day, how to fund those deals with other people's money. We'll show you how to tap into investors in your county or all across the country, wherever you call home, to fund your deals. We'll also discuss a different exit strategy. How do you structure those deals to make money? How do you work with the borrowers to figure out what exit strategy works best for you and for them and your investors? We'll also talk about the different vendors and team members you'll need, because you're not going to be doing this all yourself. You're not going to be going out and knocking on doors, calling borrowers. You're not going to be doing that stuff. There are team members to help you do that and vendors that can make you do a lot better job than you. We'll also talk about some different loan trading platforms you can tap in and start looking at deals right now. And then we'll talk a lot of other things, a little bit of asset management, some on marketing. But ladies and gentlemen, we'd love for you to be a part of it. We want to help teach 1,000 people in the next 12 months. And this is the first starting point to tap in and get signed up at noteweekend.com. If you literally go to noteweekend.com, you'll see the full schedule, the lineup of the day. Just scroll down there after you click on the RSVP. You can see the full, basically half hour by half hour sessions that we cover. Sometimes we run a little fast, sometimes we run a little slow. It all depends on the group that's a part of it and how many questions you're asking. But I stay to the very end to answer questions so there's no questions anymore, all right? Now, I'm gonna do you guys a little bit of favor. We're gonna throw in some bonuses to make it even more worth your while, okay? The one day weekend training class, that's 97 bucks, or 97, 99 bucks normally. We're going to throw in a 1 day, basically a 4 to 5 hour calling banks training. We just did this yesterday for the most recent class. We're doing this monthly. We recorded it where people get to be a fly in the wall. Literally, on Zoom, you can see me calling. You can see who I'm reaching out to on LinkedIn. You can see how I'm finding their information. You can hear the conversations back and forth. Because we put I'm on speakerphone with a mic, and you can literally hear the conversations. People walked away from that like, oh my God, that's a lot easier than it looks like to be. They're just normal people, and I can talk to them. It's not any fancy wording. I mean, there's a little bit of lingo, but it's not that difficult at all. We throw that in as a bonus. All right, that's normally usually 49 bucks by itself. The Bauer Financial List, the actual report, the quarterly report that we purchase every quarter that shows the banks that their default rates, their 30 to 89 day lates, how much in residential loans they have in default, what percentage of the portfolio, so you can really target the 0 stars to the 5 stars and really make it worthwhile your targeting list. That's included. That's normally 400 bucks roughly, depending on what you end up buying. 30-minute one-on-one phone call with me, guys. This is something too. I charge $1,000 per hour for consulting with people. I'm always glad to talk with my students, and I want to talk with you about the deal you're working on or which way you think you should go after you go through the class. That's normally a $500 value that's thrown in there for you guys as well. People ask, well, I have a spouse or I have a business partner. Can I have them come along as well and watch? Yes, of course you can. That's normally 97 bucks for another ticket. Guess what? We throw that in. Plus the replays, so you can watch immediately, not only to the last workshop, but the replays to the one that you attend live. So you really have 3 opportunities. Watch the replays, attend live, and then watch the replays of the one that you attend live. Okay, that's included in there. And then we've also got a really amazing Facebook group of students called Note Nation out there. Over 900 investors for you to market to bounce ideas off of. If you need to raise some capital for an asset or trying to sell some notes, guess what? That's what it's there for. All in all, guys, over $1,200 in bonuses. And we're gonna do one thing better for you too as well, guys. If you, at the end of the first day, you're like, Scott, I don't think this is for me, or actually the end of Saturday, hey, I think this is a whole lot of work. I don't think this is for me. I'm glad to refund your money back. No questions asked. Don't care. $49 is no skin off my chin. And I would rather part friends. But if it's not for you, hey, no business is not for everybody. I'm gonna tell you that right now. There are a lot of moving parts, but it's also for those that put the work in and understand it and are coachable. It can be a very simple business if you know what you're doing. And like I said, you listen to what I've done. Somebody who's closed on over thousands of deals. I'm here to help you out with that. So we'll give you that refund. But we're gonna do one thing, we're gonna drop the price in half to 49. It's a stupid, ridiculously priced class for what we're offering, but 49 bucks, hey, it's a little bit of investment on your part. But I want people to have 0 excuses for not jumping in. $49, everybody's got that to dive in and really gain some knowledge and really get rocking and rolling out there, guys. So like I said, we throw in the class, we throw in the calling banks training, the Bauer Financial List. That's worth just signing up right there to get it at 49 bucks. 30-minute one-on-one call with me. Have your spouse, business partner replaced, and the Facebook group is valuable as well. All of that for just 49 bucks. And I would love for you guys, whatever your goal is, I want to know about your goal, because we can structure your business. We can look at what you want to accomplish and help you achieve that opportunity to retire and have enough money coming in monthly off your note business. Not only to retire and be drinking pina coladas and margaritas on the beach, but if you want to retire your spouse and replace your spouse income, so you're doing some fun things, you can do that. Maybe you want to put some cash flow into educational savings accounts for your kids to pay for school. We can do that. Maybe you want to help supplement your parents' retirement and help them get a better high return. We've got students doing that. People are also, hey, when you were making some cash flow, it takes your vacations to a whole new level. And this business you can do from anywhere. You don't have to be in your own home market to make this happen, ladies and gentlemen. Or like I said before, maybe you just want to buy more real estate and use notes as the vehicle for that. Whatever your goal may be, it takes money. It doesn't have to be your own. We can help you find the money. We can help you find the deals and put the deals together for you guys. And the start of it is Note Weekend. It's a 1-day class, and we would love for you guys to be a part of that. You can sign up now. We can have the replays, the most recent class. You can start learning tomorrow if you get signed up tonight. So guys and gals, I want to open up. If you have any questions, feel free to type them in the chat roll, type them in the email. Glad to help you guys out in any way we can for you. It does not take a lot of hours per week either. We've got people that are working full-time jobs that do this 5 hours a week. to 10 hours, we know what's going on and how much marketing they're doing. It's going to come down to doing some marketing. And that's one of the great things that we specialize is teaching people how to market more efficiently. So love for you to be one of that 1,000 that we help here in the next 12 months. Get signed up tonight, noteweekend.com, ladies and gentlemen. And we'll see you at the top at the next class. Otherwise, be safe out there, and we'll see you all later.